Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you answers to all of your mutual fund related questions, and we give you insight that you can use. Now, I'm sure that over the course of all of the time that you spent investing in mutual funds, or even if you're new to investing in mutual funds, one of the first and the foremost questions that you have is which mutual funds are the best to invest in? And usually this is a question related to the equity mutual funds that you'd like to invest in. Now, we did a little bit of data crunching to try and get you some answers, and my guest today, I asked him a very simple question. Let's talk about the top 10 mutual fund houses in terms of the assets under management in equity, and let's talk about the top performing schemes in each of those 10. Let's see if there are any commonalities, whether the same type of scheme is outperforming in all of those mutual fund houses, because then that will tell you that there is a category that is doing well. Or let's talk about whether small cap mutual funds as a whole are doing well, or mid cap as a whole are doing well. And there were some really interesting answers that came through. We looked at the top 3 performers of each of the fund houses in the top 10. My guest today is Mohit Gang, the co-founder and chief executive officer of Moneyfront. Mohit, thanks so much for taking the time, and pleasure having you.
Thank you so much, Alex. Always a pleasure to be on your show.
And thank you for the data that you've shared with us. In fact, let's pull that up on the screen before we get into some of the details. The 10 mutual fund houses will be fairly familiar to you. So let's pull up the initial set of data to give you a sense of how things look. I'm looking at the Excel sheet that you've sent me right now, and the top mutual fund house is State Bank of India. But actually, before we get into this, there were some initial readings that you had in terms of which schemes rank at the top. What were they?
Okay, so Alex, first of all, thank you very much for nudging me to get this data out, because I haven't been looking at the data in this format. It's a very interesting thing that we have done right for this show. So yes, when we categorize top fund houses by equity AUM and see which are the top performing schemes in these fund houses for last 5 years, the data is startling, right? 50 to 55% of the schemes are sectoral schemes, right, which have actually outperformed across all the fund houses. So every fund house will have either 1 or 2 or all the 3 top schemes are sectoral. Then around 20% is mid cap and around 20% is small cap. So out of our total universe of 30 stocks, 30 funds which we were checking for 10 top fund houses, almost 15 were sectoral and 6 were small caps and 5 were mid caps. So that's a very large portion. And one very interesting thing is that there was 0 large cap. There was not a single large cap name.
So I was actually looking at the kind of returns, because if you look at the annualized return over a 5-year period, in most situations you'll get close to 30 or slightly above 30 in many cases. And I'm looking at across the board, we're talking about 30 mutual fund schemes here. None of them have given less than 20 over a 5-year period, absolutely, which is absolutely phenomenal if you think about it. But what do you have to say with regard to the thematic schemes that you've identified? 14 of the top schemes are thematic schemes. There are also a lot of commonalities in those themes, Mohit.
Absolutely, Alex. So return-wise, I think we should there's no debate. The returns are like mind-blowing. These are fantastic, and obviously these have been fueled by whatever has happened in the market for last couple of years, right? The thematic schemes, I think bulk of them, barring let's say 2 or 3 names, everything is either directly infra or infra-related themes, right? So economic reforms, infrastructure, power, diversified infra, all those kind of schemes are the ones which have led the market. Honestly, there are a couple of names which are from healthcare and maybe one auto logistics kind of a theme, but otherwise it's out and out infra.
Okay, let's go step by step then. And let's first talk about State Bank of India's mutual fund house, State Bank of India Mutual Fund and SBI Mutual Fund. And let's talk about the top performer here, which is the Contra Fund, followed by the SBI Long-Term Advantage Fund, which is an ELSS. And the third is a thematic fund, the Healthcare Opportunities Fund, which is one of the only healthcare funds that have actually done incredibly well.
Absolutely.
What is your reading of this? And the fund house strategy as well as the fund manager's approach Has that come into play here?
Look, I think very diversified set at this fund house, especially if you come to see. Otherwise, all the fund houses have some commonality. Out in SBI, we find 3 funds which are extremely different. Contra is a well-known name in the market, extremely popular. They are quite famous for following a contrarian approach in terms of buying out sectors which are underperforming and then waiting a little patiently for them to outperform. However, I'm not pretty sure as to how much of Contra is actually Contra or it is mainstream. That's a debatable question, but yeah. But I think they've done tremendously well for their investors. So no questions on that. Long-term advantages in ELSS, it's a slightly mid-cap heavy scheme, and that's why it's actually outperformed, right? And healthcare opportunities, as you rightly mentioned, it's the only of its kind in the top 30 scheme bracket which we have identified, where a healthcare fund has come in. Obviously, no healthcare and pharma per se have picked up a lot of steam over last 1 year, and that recent performance, if you see the last 1 year performance, is actually weighed in on the last 3 year, 5 year performances and actually pulled up everything. So I think that's where they've won the category.
Okay, now would you have something specific to say if somebody's looking at the Contra fund specifically? The other two are fairly obvious. If you're talking about an ELSS, it's usually bought for tax purposes. It functions like a flexi cap. Yeah. The Thematic, you've said often Thematic should be 10% of a single theme should be less than 10% of your equity assets under management. I'm guessing you're going to say that. I'm trying to, I don't want to put words in your mouth, but you've said this so many times.
I have, and I still maintain that you can't over leverage yourself on a single theme unless you have some extremely strong conviction or some insider info, as in you are related to that sector per se, you're working in that sector, and you completely understand the finer nuances of that sector.
Okay, but Contra fund, where does it sit?
Okay, I'd rather not call it a thematic, though it is kind of bordering a thematic fund, but the AUM is so large, the performance has been rock solid for so many years. I would rather put it more like a flexi multi kind of a theme out there, trying to play some bit of contrarian advantages, and that is what is giving them that extra bit of edge in the market. I think Contra is one of the flagship schemes of SBI as a fund house, and that's where they put in a lot of energy and effort also.
45% gained over the last 1 year, and that's tremendous. Yeah. ICICI Prudential, the second largest fund house in terms of equity assets under management, and all 3 of the top performing schemes are thematic schemes. The first one, and the one that has gotten 32% return annualized over a period of 5 years, is the ICICI Pru Pharma Healthcare and Diagnostics Fund, which is a thematic fund. It has, I would think, a larger approach than simply a pharma fund. You have the ICICI Prudential Infrastructure Fund and you have the ICICI Prudential Technology Fund, all of which have done incredibly well. But I actually find it interesting that a 3-year annualized return for the technology fund has yielded quite low. So I would think that it has to do with an underperformance for a period of time, which is the danger of a thematic fund.
Absolutely. So look, if you were an investor in tech names couple of years back, nothing has given you return, right? It's just the rally in the tech has honestly just about begun, I would say around 8-9 months back or 10 months back, when it was absolutely certain that the Fed is going for a rate reversal. And tech is a sector which is highly geared towards a rate cycle reversing. Honestly, once the US rate cycle reverses and then India follows suit, you might still continue to see some gains accruing from the tech space per se, but that's the danger of being in a sectoral or thematic fund. You never know when the cycle actually changes. Pharma and diagnostics, for that matter, Alex, you are lucky if you have been in a diagnostic or a healthcare space from last 1.5-2 years back. Pharma has just about pick up. Pharma's rally has started almost like 6 months, 9 months back. It was not a wholesale rally on the entire space, but the funds which have done well are more widespread in nature, catering to the healthcare services names and the diagnostic names, which have actually rallied much before the pharma names have now starting to rally. Right? But you have to be very careful. I'll just give you a small example. During COVID times in 2020, right, the pharma actually rallied superlatively in the first half of the year. That's when bulk of the investors got in by around July, August, and then pharma gave nothing for the second half of 2020. 2021 was absolutely flat and negative. And again, 2022, you got some returns from pharma, but nothing to write home about. Absolutely, right? So people who got in the timing wrong, thinking about COVID scare and getting in into the rally at the fag end of 2020, they made nothing in pharma. And now the pharma has again rallied back last whatever a year old story. So you have to be extremely careful and you have to be very precise in getting these cycles right.
No doubt.
That's absolutely tough.
And timing is incredibly important. Timing the entry and the exit. Both for a thematic fund. HDFC Mutual Fund, the three that have done well, there is a mid-cap fund that ranks at the top. You don't see this very often. Small cap has taken the cake more often than not, but in this case, you have the HDFC Mid-Cap Opportunities Fund that has gained close to 30% on an annualized basis over the last 5 years. There is also the HDFC Small Cap Fund. Both of them have a substantial assets under management. Cumulatively, more than 1 lakh crore being managed between these two schemes. And you also have a thematic fund, which is the infrastructure fund. We've spoken about this theme in the last few minutes. It's got an assets under management only of about 2,500 odd crore rupees, but it's done superlatively well. Comments about the mid-cap and the small-cap schemes?
Oh, I think across the fund houses, I think the story is absolutely similar. They might not have ranked in first three, but they will definitely be in the top 5 schemes. Anywhere and everywhere you pick up any mid-cap and small-cap fund, they have done exceedingly well. But kudos to the fund manager out here, Chirag Stelwart. He has been a stalwart on managing these two funds with that kind of an AUM. Honestly, I think one myth which completely shatters away Alex, and I've been equally guilty of thinking that small AUM is always better, but to manage AUMs of that size in mid and small cap funds and then deliver that kind of a return, I think hats off to the fund manager there.
And incidentally, that plays out in the next mutual fund house as well, Nippon India, the largest small cap fund being managed in the Indian industry right now. It has assets under management of 61,000 crore. And I looked at the statement this morning, incidentally, and I saw that they have 215 stocks. And this is a scheme that has gained 51% over the last year, and it has gained 36.6% on an annualized basis over 5 years. That there is myth busting.
Absolutely, absolutely. Look, so quite a number of things have to go right for you to deliver that kind of return, and I would say it's a combination of both luck and skill. It's not just one factor alone at times. And so Nippon Small Cap. Thank you very much. But yeah, I think that's the story, Alex. So Nippon Small Cap with that kind of an AUM also have participated in the index completely. When I say this, they have 215, 220 odd stocks in the portfolio out of an index which represents 250 names.
Yes.
So it's virtually picking every single name in the index itself. The good part is that out of every 3 stocks on the small cap side, one has doubled in last 2 years. And they've just been there in every name, so they have participated in the rally. Anyone who has tried to be a choosy and picky about not having some small cap names and trying and managing a portfolio of 50, 70, 100 odd stocks has lost the battle, to be honest.
Which is why, despite the fact that we see so many mid-cap and small-cap funds ranking in the top performers,
absolutely,
a lot of them have not beaten the benchmark.
Yeah, I was just coming to that, Alex. Strangely, most of these funds, barring 1 or 2, actually Nippon and HDFC are aberrations there also. They have beaten the benchmarks. But most of these guys are underperforming the benchmark, which says that a broader market, the broader mid and small cap indices have done phenomenally well over the last 3 years. Everything has risen, and that's the rising tide has lifted all the boats, basically.
Kotak Mahindra Bank, once again, so I say Kotak Mahindra Bank, Kotak Mahindra Mutual Fund, here too you have a similar combination, right? Small cap right on top, followed by a thematic, which, surprise, surprise, is infrastructure and economic reform fund, which has returned 57.8% just over the last 1 year. And the third is the mid-cap, the emerging equity fund, which is Kotak Mutual Fund's emerging, which is the mid-cap fund. Done incredibly well. Comments about the approach that they have, or is it simply the participation in this space that is done well?
Look, again, as I said, the participation across the board has been phenomenal on the mid and small cap side. So every fund house will have similar kind of returns or almost mirroring these kind of returns. So that's fair. But again, kudos to Kotak. Credit should be given where it's due. They've lost few fund managers from their stable, but they have been a good institutionalized setup able to follow their philosophy and stick to the guns fairly well, and which reflects across different schemes of Kotak. So I think you have to give credit.
Yes. Credit where it's due. Pankaj Tibrewal is who you're talking about.
Absolutely.
Okay. UTI, Healthcare Fund, has done incredibly well. Mid-cap fund is ranked second. And the UTI Transportation and Logistics Fund, here's an interesting one. It has gained 57.4% over the last year and has an annualized gain of about 26% over the last 5 years. Comments about this one?
Typical story of right timing, right place. Look, there wasn't anyone in this space but only UTI Transport and Logistics Fund. When the entire pack picked up, they were the only ones standing on the shelf and they've got the benefits out of it. And now you see the EV schemes and the auto schemes and all those kind of funds getting launched, but they were the only ones, right? It happened with Tata when they were the only ones with Tata Digital theme. And the moment the tech boom picked up, they were the only ones benefiting, and then people started launching IT funds and tech funds and so on and so forth. So it's a typical case of being on the shelf and right timing, right positioning, and the market cycle was extremely favorable.
Early mover advantage certainly helps, and time in the market, because right, you've been able to spend time. Axis small cap, Axis mid cap. Now, it is a top ranking fund house in terms of assets under management, but unfortunately, when you look at the performance, it has lagged its peers. And here they have a small cap, mid cap, and the only large and mid cap that ranks at the top here. Comments about this?
Look, it's come in because of the overall fund house performance on the mid and small cap side hasn't been at par with the other fund houses. Honestly, I think Axis, UTI and couple of other fund houses have suffered a lot in last 2-3 years of rally because of their overall philosophy of sticking to quality.
Yes.
Right? And quality as a pack hasn't picked up in the market. It is more value, which is done exceedingly well, and all momentum driven value. Right? So for last 3 years, if you see the market cycle, it's been momentum value driven themes. My sense is quality is something which is just showing green shoots now, Alex. And I've seen that for last 3-4 months of data. And I can safely say that these are few names which should now do well in next 1 or 2 years of cycle.
It's an interesting point, because should you hold a fund manager accountable for sticking to their guns when everything else is doing well?
No, absolutely not.
You should not, right?
Absolutely not. I think they've been true to label. They've been absolutely fair in justifying their underperformance, and they've been absolutely fair saying we stick to our quality and will not change our core philosophy, and our cycle will come.
Cycle will come. All right. There are 3 more to talk about. Aditya Birla Sun Life is the next one we're talking about, and there are all 3 thematic here once again. There's the Digital India Fund, there is the Infrastructure Fund once again. Interesting one here, Dividend Yield Fund. What do you make of this one?
Value theme. Out and out value theme has done well, but this is again a great fund, extremely old fund, one of the first of its kind in the dividend yield as a segment. And again, these are names which have deep intrinsic values, and somehow the PSU pack and the other packs have like really picked up.
The RECs and
absolutely, that's where they've benefited.
Yeah, and these are incredible stocks that have gained over the last 1.5 to 2 years. Mirai Asset, there are 2 thematics and 1 mid cap. The mid cap has a sizable AUM, not very large in terms of what we've discussed in the past, but 42% gain, not too bad, nothing to sneeze at. What do you make of this?
No, look, Mirai, like Motilal, is an equity-heavy fund house, basically. They are predominantly known for their equity, and again, deep focus on quality. That's where they have also suffered or lagged their peers in the industry to a large extent. My sense is healthcare, again, the healthcare cycle has been extremely favorable for last 1.5 years, and that's where they picked up. But mid-cap is no aberration. It stands out with the pack in the market.
Now, I'm curious about the last one. DSP is the 10th. And I must say, there are so many fund houses, but we can't possibly take all, which is why we chose 10. There are 2 thematics and 1 small cap. The DSP India Tiger Fund's interesting for me, because I think arguably the best performance over the last 1 year.
I totally adore the fund and the fund manager, Charanjit Singh. He's terrific in the way he has managed the fund and the scheme. Honestly, I think a grounds on man. If you talk to him, you'll realize he had a real pulse of what is happening on the ground, and the way he's managing the fund has been terrific. All kudos to him for this outperformance. Overall theme obviously has done well, but again, you require some smart management.
How do you understand this team though?
It's infrastructural growth and economic reform. So it's a broad-based theme. So they kind of cover everything, not just infra, not just ancillaries, but anything which aids economic reforms also, right? So it's a fairly large thing. It's not a very narrow theme, and that's where again I think they've benefited a lot.
Do you recall the size of the portfolio in terms of number of stocks?
Not at the top of my mind, honestly, but I can come back on that.
We can talk about that at some point. But so a few more talking points from this, right? Which is that you can't judge future performance, of course, based on what we've seen, but certain aspects that we have been speaking about on an ongoing basis have come to the fore here. The broader market theme has done incredibly well. Thematic funds account for half of the top performers at all of these top fund houses. This is, I think, a list that accounts for 70% plus of the market, if not, maybe more than that.
Pretty much there, yes.
Yeah?
Yes.
So we're talking about the mutual fund industry. This is a good benchmark for all of them. And you're largely seeing half of the top performers are thematic schemes.
Absolutely.
But what's the danger here?
Danger is people moving away from large and flexi caps by not finding those names in the list out here. Again, as I said, these are market cycles. They will repeat time in and time out again. You cannot get disappointed by not seeing your large cap name or the flexi cap name or the multi cap name out there in that list. They are the funds which will bounce back sooner than what all of us anticipate. My sense is people have to stick to the asset allocation and not get tempted to be drawn into those thematic themes, because more often than not, if you track the cycles of these thematic funds, they are extremely volatile and marred with cases of people getting stuck at the wrong end.
Okay, my team has helped me out. 93 stocks as of the last count on the Tiger Fund.
Brilliant.
All right. We've got several queries that have come through, and by the way, in case you've got questions for us, let me pull that number on your screen right now so that you can send them to us. And if you write in to us, make sure you tell us your name as well as what your age is, and preferably if you've got a specific goal that you're trying to achieve. The first question that I'm taking today is from Manish Prajapati. He says he's 37 years old and he's looking to invest 1 crore rupees, a sizable corpus, with a time horizon of 15 years. His goal is to reach 5 crore, and he's looking at an SIP as well to supplement that further of 1 lakh a month, along with the lump sum when the opportunity arises. He's willing to take moderate risks. And what are his suggestions here? Would you say an STP approach? Because a lot of people have said 15 weeks of an STP is a good idea, but it's a very large corpus.
I get you. So look, couple of things, Alex. First things first, 1 lakh SIP is a great amount to go for. Yeah. He need not be worried about the corpus. My sense is he will accumulate just by SIPs. He will accumulate over around 7 odd crores in 15 years. The time frame is good, right? When it comes to lump sum, and I read that interesting line there, lump sum when the opportunity comes.
Yes.
Look, honestly, to me, the best opportunity, the best day to invest was yesterday, and today is the second best day. Yeah. I've always been a very firm believer of that. The more you wait, the more the market will torture you, right? And the cost of staying out of this market is exorbitant in these times, right?
And the famous saying, more money is lost sitting on the sidelines.
Absolutely, absolutely. No two doubts about that. But yes, 1 crore is a sizable chunk. If you really want to get in, maybe do a 6 months to a 9 month STP right now. I would not suggest a longish STP beyond a year at any point in time, right? Because you have a lump sum chunk and you are an equity participant, you have a 15-year time frame, right? Then there is no reason for you to wait beyond a year. Just get in within a year.
Okay. Any suggestions that you would like to make in terms of the allocation that he can do?
Look, I'm not aware of his profile and his existing
These
portfolio.
These are not recommendations.
Yeah,
we must state that very clearly.
But I can safely say that go with a Nifty 50 index fund and a next Nifty 50 index fund. Those two are critical components of a portfolio.
Yeah.
One active mid cap, which could be an Edelweiss mid cap, or a factor based passive, which could be a DSP mid cap 150 quality 50 index.
Okay.
And an active small cap, which could be a Bandhan small cap fund. I think that's good enough for a healthy portfolio.
I noticed that you chose a quality factor and not momentum. Momentum is, despite the fact that momentum by far and away has beaten active managers hands down, and that should tell you something about what Mohit is reading from the tea leaves that he's looking at. Sandeep has got the next question. He's 58 years old and he's asking what the best balanced advantage fund is to invest in over the next 5 years. I'm glad that Sandeep is asking this question. I'm glad that more investors are looking at this category.
I think honestly it's good to be looking at debt as a category. Standalone also, I think there are superlative returns to be made from long-term debt funds, but as a balanced advantage, it's a great category to be in. Pru ICICI balanced advantage, if you are a conservative investor, they always err on the side of caution. Very, very conservative. I like S. Naren's philosophy on that. Extremely steady fund, old hand, no hanky-panky stuff out there, right? But if you want a slightly more tactical balance advantage fund, then I'll go with Edelweiss balance advantage. They changed the ratio of equity and debt composition basis some technical parameters and not just basis fundamental parameters. So I really like their approach as well.
Okay. So Rahul's got the next question. Rahul's 37 years old. He's got 20 lakh that he wants to deploy and he's looking for advice. He's got a time frame that he needs to navigate, which is 7 years. What is the advice that you would give?
I'll actually go with the same one which we gave to the first viewer, and answering you on that between momentum and quality. Look, I'm one of the most ardent fans of momentum as a factor as they come along your way. But yeah, I think a shift to quality is right there knocking on our doors. I'm not pretty sure when will that happen, but momentum as a philosophy captures everything. It over encompasses quality, value, everything, because wherever there is momentum, whether it be on the quality stocks or on the growth stocks or on the value stocks, momentum as a factor will capture that. So if you're an aggressive investor, then you should also have a momentum factor in your portfolio.
Okay. But do remember, of course, allocation goes...
Yes.
Absolutely.
Yes.
Now, this next question, hopefully Jose is paying attention when we've spoken about, asset allocation and how to construct your portfolio. He's 53 years old and he wants to invest 70 lakh in a flexi cap fund, and hopefully this is now a part of a larger portfolio. But having said that, you've studied a variety of flexi cap funds. Which ones stand out to you?
I'm first of all glad that he's asking a flexi cap and not a mid and small cap fund.
So am I.
Absolutely. So look, there are multiple which are good. If you want some international diversification, then obvious choice is Parag Parikh. Off late, the performance has been a little dim, but it's also too huge a size of AUM now. I would rather go with a Bandhan flexi cap and a Franklin flexi cap. Honestly, I think they are doing some great work slightly behind the limelight, and I really like the way the funds have been constructed. Both the funds again are old hands and very, very steady and good performance, not extremely large AUMs, good manageable size and corpus, and overall great portfolios.
Mohit, it's been an absolute pleasure. It's been an insightful conversation. Thank you so much for taking the time.
Thank you. Pleasure always, Alex. Thank you.
All right, that brings us to the end of this particular edition of the Mutual Fund Show. Let us know what you think on that number, or in fact on any one of our social media platforms. Do stay tuned. Lots more coming up on NDTV Profit.